Assalamu alaikum wa rahmatullahi wa barakatuh, dear brothers and sisters. Today we are going to talk about the revenue and sales cycle, which is chapter 4. As we discussed last time, we discussed about the TBS, transaction processing cycle, and then under the transaction processing cycle, we said that the processing of the recording the transaction and so on it goes based on the cycles, and we have three cycles. Today we are going to speak about the first cycle, which is the revenue cycle. Talking about the revenue cycle, we need to know the basic activities under the revenue cycle. Number one is starting from sales order entry, then shipping and billing activity and cash. Here we have the DFD of sales order process. It shows the flow of the transaction starting from customer when the customer send the customer order and process it up to the posting to the general ledger uh, to the end. So in the next class we will have step by step for this DFD. So let's go. Starting from the customer when the customer send a customer order, then company will process that customer order, processing the receiving of the order. The second process is to check the credit of the if the customer is buying on credit, but if it is on cash, then it will this step no need to process the check of credit. So sales order, checking the credit, for sure we need to check the credit record file. We need to check whether this how much the balance and how much the limit on the pre-listed credit amount for each customer. So we read that, and this information coming from this file, it will be an input to check of credit, and the output of this process, it will be the approved of sales order, either partially or reject the sales order in total or approve total of customer order. After we do so, we'll open an order file recording the received date and approved date, and then after that we start to process the picking of goods from the warehouse, and that will be the input for this pick of goods process will be based on the stock release, based on the receiving orders process. And then we have two options. If we have insufficient quantity, then we will update the file of back order file. But if we have sufficient quantity of that items ordered by the customer, then we will update the stock records file by the product type and quantity. Then after that we will create a new process of shipping the goods. The input for that is the verified stock release. Then after that we also the input for that will be the picking slip shipment notice coming from the receiving the order. And then we will send the company will send the output of the shipping of goods, the document of backing and billing of lading or shipping document. Then also we will update the same information to the open order file. We will update the shipped date, back orders status, and then we will also update the shipping details to the ship log file, which is, as we said, this is a kind of processing control, one of the processing control. From the shipping of goods, the shipping notice also will be the input of the new process called billing customers.
And in billing of customers, that is the issuing the invoice to the customer. So it is this, now it is talking about money. So if you notice here, we will start to send also the invoice as an output for bill of customer process to send to the customer to recognize that this amount of sales. So also we will update the binding file and by giving invoice copy, and also we will update the sales details to the sales journal, and also we will update the two sides of the account, which is the inventory record, and also updating the account receivable, as we said, because this is a credit sales. So now by updating the inventory records and updating the account receivable records, we need to update the total amount due in the account receivable subsidiary ledger, and also update the inventory subsidiary ledger. So through all of this posting of subsidiaries master files of account receivable and inventory, we would like to post to the general ledger. From where we get the input for general ledger of this transaction, we will get it from the summary of the account receivable and summary of the inventory record, journal voucher, and as well as it will the input of sales journal voucher coming from billing customer process. So it's expected to match this transaction from those three sources. So it will be kind of, as we said, processing control check. And then after that, we do update the general vouchers file, general journal, and as well as we will update the general ledger record or general ledger master file. So this is in summary, just to say how the process is how the flow of the process, starting from customer step by step up to the posting to the general ledger. We need to have how to say a sense of imagination of the flow, and we imagine that how it's processed. We need to know first this is a manual process of transaction, and we are in DFD. DFD normally did not recognize different file, either it's manual or computerized compared to the program or system flowchart. So we will that's a good example, good flow explanation, I believe. So please try to go back and 2 or 3 times to understand the flow, then you can reflect this to other cycles. Let's talk about the conceptual system, sales order processing. We will talk about manual and then about the computer based or advanced based. So to have good understanding of the flow of the process of recording the transaction, let's categorize the transaction or the flow of the process by stages. I believe the activities under sales order and entry processing steps, which is just to verify, to key in the information of the customer order and so on. It is and even to respond to the customer inquiries. So this 4 activities is called the entry processing steps, and the source document of this process is start from sales order or customer order, then source order. Okay, so we start by taking the customer order and create the sales order. document. Then we check and approve the customer credit, and after that we check the inventory availability and stock pickup, or what we call picking the goods from the inventory. Then lastly, respond to customer inquiries. And the response of customer inquiries, if it is approved, in terms of, if it is, let's say the credit, customer credit is approved, and also inventory is available, then we will respond by sending the documents or the invoice, and sending the shipment documents. Okay, so this is the stage one. And remember, at this stage, no recording in the accounting files. So this is kind of non-financial activities happened through the system or the process, but it is not carrying any financial impact on the recording of either the account receivable or the inventory. So this is an example. This figure illustrates the sales order file, and if you can notice here, we have some details about customer order, and also some details about the invoice date, shipment date, and also some information about the customer himself or herself. And then normally for the invoice number, we will either it is printed or we key in based on the invoice number. So, and this is quite normal. I believe you know what is it. Description, quantity, unit of price, and total, and so on. After we respond to the customer by sending a sales order copy, which is including the price that he's supposed to pay for what he's stated ordered. And then after that, after the customer confirm, then we will start the stage of shipping the goods or processing the shipment of goods. And shipping department, if we have big companies, then we will have that separate shipping department from the warehouse. So shipping department uses the picking slip and shipping notice to reconcile goods received from the warehouse. Goods are bagged along. Also, the bill of lading will be prepared, and the goods are given to carrier or the delivery man, and shipment is recorded in the shipping log. At this stage, the inventory is leaving the warehouse. So now we will start to having effect on the general ledger account, which will decrease the inventory balance as well. And in the other side, also the sales, the cost of sales general ledger will be also increased. So this is the starting point of recording in the account. So this figure is explaining and illustrating the bill of lading, and it describes that what we normally practice to illustrate the address of customer, the shipment, the carrier, the company will deliver the stuff. Now we have different IT companies based or application based the carrier companies, like what we have here now, Lala and so on. Even Grab, they start to do what we call the delivery business. And this is in case we have a third party. But if the company have its own delivery department, so they will the billing, the bill of lading will be different in terms of design and information. Okay, so we have main thing, we have description of the stuff that or the goods that we are sending, and stated the address of the customer, stated also the charge, if it is third party, the charge of delivery, and so on. After we're done with the shipment process by sending the goods and shipping the billing and leading documents or shipment documents, so we will prepare the invoice or bill and send the sales invoice. Billing record keeping includes recording the sales in the sales journal. So sales journal will be affected here by the amount of the invoice. The sales journal is special journal used for recording complete sales transactions. The entries are summarized in sales journal voucher used to update the general ledger control account. So we start normally, especially for the big companies, we will have what we call sales journal voucher just to record the list of transactions. Then we record and update the general ledger control account direct. Okay, then after that we update the account receivable, and the source document is the credit memo and monthly statements, or we can call customer monthly statement. This figure is illustrating the journal voucher. Here we can see the account number. So if we have more list of account number, then account name, and then we have the debit, credit, and so on, and we will have the list of it. Then we need to have approved by and posted by. Posted by means the one who key in. This is in term when we do a manual process, but also can be done through the digital record. We will have it, but in terms of process, the process will be in terms of approved through the system. Right after processing customer bill and updating the general voucher of sales, then we start to we would update the inventory records and as well as the account receivable records. So the inventory control function updates the inventory subsidiary ledger account from the stock release document information. And we also, as I said, we will update also the account receivable record, customer records in the account receivable subsidiary ledger updated from the sales order ledger copy, and from both files we will update the post to general ledger. General ledger function use the general vouchers to update the control account as well. So this is the example of inventory subsidiary ledger, and we have the list of records, the list of units sold and so on, total and other information that is related to the each transaction. Here we have the accounts receivable subsidiary ledger, and in here we it shows that this document explain or illustrate including the invoice number, the payment, debit and credit, and the account balance and so on, some information about date of the transaction and name of the customer and the address and so on, and also as well as if we have account chart, then we will have the account number. Okay, so that is the information here. If you notice here, we explain just now the flow of the transaction in details for almost more than 5 slides, and when we explain it through the DFD, we spend less time, and also I believe it's more easier when we explain the flow of all of this explanation by documentation, and also explain what's happening and so on. So the point that I want to put here is that when we use the documentation techniques, we simplify the visualization of the transaction flow in an easy, understandable, simple way. So that's the point that I would like to make here. Now let's talk about the scenario if we got sales return procedures. So if we got sales return due to either the damaged item or wrong item being sent to the customer, then we need to address that on the system and adjust the recording. So the first step is preparing return slip. Customer records in the account receivable subsidiary ledger updated from the sales order ledger copy, and then prepare the credit memo. If the clerk has authorization, send directly to the billing function and approve the credit memo. Credit manager evaluates the returns that approved the credit memo to the sales department. Then after that, we do update the sales journal and update the inventory and account receivable records. Let's look into the DFD of sales return procedures. Just now we explain it in details in wording. So here we explain it on the flow. So imagine we got we received back slip from the customer about items to be returned from the sales process. So we start to process here, open the processing of preparing a return slip. And in preparing the return slip, we need to send a copy of the return slip to restock the goods, restock it in the process, in the inventory. Then we will update the stock record by the items returned, and then we send one copy to the to prepare the credit memo. Credit memo is the main document for the sales return function or sales return scenario. And in the what we will do trying to update the approval credit memo. It will be by the sales manager or the credit managers. So they will check we will send the credit memo and then will be approved by that sales manager, and then we start to then update the sales journal. In updating the sales journal, we for sure we need to update the sales journal file, and as well as we start to update the related accounts related to the sales return, which is updating the inventory record and as well as updating the account receivable. Okay, so we start to update the inventory record first, and when we update the record, we update the inventory subsidiary ledger file, and from this update process, we will update we will process updating the account receivable record, and then also we will update the general ledger. In updating the general ledger for the master file for all accounts, so it will be updated through the all for the account receivable and for the inventory. Okay, and then from the general ledger it will be updated the two main files, general voucher and the general ledger record. As simple as that. So it's kind of, we are trying to update the items, but we need to have sort of what we call control of processing, and the control of processing is kind of located in this process and this process, and then the rest will be a kind of flow of updating files. Now, in the, let's say we process the credit purchase, credit sales. then we need to receive the cash of either 1 month, 2 month, 3 months from the transaction. So when we receive the cash, we need to start to open email and prepare remittance list, or receiving the when we receive the cash, we need to prepare remittance list, especially when we receive cash from one customer for multiple invoices. So the customer did not pay the cash, or did not pay the cash for one single transaction, but for more than one transaction. So in that case, we need to prepare remittance list, and this remittance list including the invoice number and the amount that is being settled by the customer. And then remittance advice is a turnaround document, because we will use it twice, and then record and deposit the check after reconciling. Employee records check in the cash receipt journal and prepare the bank deposit slip. Okay, so we will, after receiving the cash from the customer, we should update the account receivable records, update the general ledger, and then reconcile the cash receipt and the deposit to the bank. Employee not involving in cash receipt process reconcile receipt by comparing the copy of pre-list, deposit slip, and related journal vouchers. Why we say employee not involving in cash? Because it's kind of segregation of duties and control activity, segregating the one who received the cash and from the one who updating the file and reconcile. Okay, so key objectives for this activity is to reduce the risk of thieveness and to make sure that the customer account is properly updated with the payment. Okay, so this is the receipt of remittance advice. So we have it will be list of invoice number. If you see here is the invoice number list, and then we will have the date of transactions, and here the clearance of the check. Here is the amount, and so on. So we combine those the total amount we received, total amount from customer for multiple payments. Okay, so this is the cash receipt journal we update. Just now we finished discussing the manual process without the interfere of the technology or the computer-based functions. Now let's talk about the system of processing the transaction. We mean here the processing the sales revenue recording and so on, based on when we have IT environment, either basic or advanced. So under the physical system, we have basic processing, and we have also advanced technology processing. We will start with basic processing, and then we will talk about the technological. The physical accounting information system combine technology and human activities. It's different from basic combination and to advance, as we said. So smaller business tend to rely less in technology, whereas large companies tend to employ advanced technology. So the system applied for small business companies, normally we call it basic technology system, whereby for big companies or multinational companies, they tend to have advanced technology system. The nature of the mixing employed in system impact the internal controls needed of control of the system. So the more is because we know, we explain in last class discussing the internal control, the physical one, and we also discussed the IT control. So the more we are in IT environment or advanced technology, so we will need more IT controls and so on, whereby when we have less less IT, and we have more human interface system, then we will have more internal control activities related to the staff and operation. So now let's talk about basic sales order processing. In general, this figure is explaining and illustrating the basic technology sales order processing system. And we can see here that, okay, we can see here, if you notice, we have the starting from customer, and customer order document is still manual. And then we have manual process of the transaction, and we have the documents of the customer order, and then we check still manual. But here we start to have terminal, which is not manual. It is computerized entering to the file. We are reading this file. The sample of cylinder is, as we said, it is the file, the computer-based file. Okay, so then we generate the credit copy approved, and then we keep it here. This is, by the way, this is what we call, this is a system, what we call a system flow chart. Okay, because we have here the, if you notice, we have the department level, we have department illustration, so we know sales, the sales, in the sales department we have this transaction. In credit department we have those flow of transaction, and then we show the relations. So in a basic words, we can see that here is the mix between the mixing the technology or the computer-based processing of the transaction with the human or the manual process. We can see that we have manual process, we have manual documents, and also we have the digital file like sales journal and other files in cylinder. So that is the idea of having both. We call it basic physical system, where we combine both system, both human. Here is the continue also for billing, inventory controls, account receivable, and general ledger up to the point, to the end point. So we can see that we have here we have terminal key in. Terminal means we key into the system through the, it is a computer key in. Okay, and we have some files, digital files, and we have as well as manual documents here. Okay, so so the physical system or the basic sales order processing start by begins with the customer replacing or when the customer placing an order, sales department capturing the details on sales order form, and then credit department verifies credit and approves order. Warehouse send inventory to shipping and recording inventory reduction, and then shipping reconciles order, prepares bills of lading and shipment items, as well as records transaction and sends stock release to billing. Then billing department will billing departments will prepare the bills and send it to the customer and update the sales journal. Uh, in updating the sales journal, based on the updating sales journal will be updated the account receivable, and inventory clerk will update the subsidiary ledger journal. Vouchers and summaries are periodically sent to general ledger for reconciliation and posting. Basically, all of this flow of details is same like what we have explained in the manual process of the recording transaction of sales and revenue. However, here we try to explain the integration between the two, also involving some IT functions. Okay, so structure for account receivable and inventory subsidiary files. If you see here, we have in sales order, we have the amount, we have quantity, we have the inventory number and the account number. And this information are in different files in the system. So it is in the account receivable subsidiary file, and also it's in some information comes from inventory subsidiary files. And this is what we will explain later on in how the database or the relational database working. So it brings information from multi files and it combine it in one file that we are updating. Okay, so the basic technology cache, this is the same things, the same process, I mean the same idea, we can apply it into the cash received system. So we can see we start by receiving the check and remittance advance, then we manually update the system, update the files, remittance list, and send the check to the bank and so on, and then we update the digital file of cash receipt journal, and then from this we process, for sure we send to the bank the check, and when we get the money in, then we will update the account receivable digital sub ledger as well as the general ledger in the general ledger department, and so on. Okay. For the basic cash receipt processing, as we explained on the system flowchart, so we start with the clerk and remittance advice received in email room. So where the clerk will reconcile the items and endorse the checks, prepare the remittance list, and send the check and list copy to cash receipt department, as well as they will remittance advice and list copy will be sent also to the account receivable department, so or account receivable clerk. Cash receipt clerk record the check in cash receipt journal, prepare the deposit slip, and also send the check to the bank. Then account receivable will be updated by the clerk and also send the summary to the general ledger. Your general ledger clerk reconciles the amounts and post to control account. Controller clerk performs periodic bank reconciliation. Okay, now let us talk about the advanced technology, where the technology and computer-based functions is dominant over the human involvement in the process of the revenue cycle. Okay, so using the advanced technology, will focus more in automated process rather than the human. With the integrated sales order processing system, many functions are performed automatically to the center of computer science. So why this advanced system do that? Because of that this labor intensive activities increase the operation cost, and as well as contributing to human error. Human error will be high, and whereby the technology would reduce the cost and reduce as well as the errors and increasing the efficiency. So that's the main things or the main advantage of this. So the objectives of advanced technology is to improve the performance and reduce the cost. It's also will significantly alter and simplify the revenue cycle. So this figure is explaining the integrated sales order system, or the what we call the advanced system of sales order. Okay, here we see we still start with customer order, which is the source of document, which is still manual, whereby we from this point we start to in sales department, you start to have terminal to enter the sales order, and we can see the arrow, the zigzag arrow. It shows that it is real time. It's real time update, and the square of sales order system is the computer processing. And then from the sales order system processing, we can see that we update all the digital filing or digital database. We update the sales invoice file, we update the general ledger, we update the purchase requisition file. And why we update the purchase requisition file? Due to the updating of the inventory subsidiary file, and if there is a lack of some files, or there is a lack of availability of some items in the inventory, then we will it is connected to the purchase requisition file to request those items, and also credit history file to read and update about the customer. And then from here we have real time, meaning that a second of update and process to terminal to update the or to update the shipping of goods in the warehouse department. So we will print out the stock of release, and then we will process the shipment. And normally when process the shipment, we will do reconciling the goods with the backing slip and prepare the bills of lading. Normally this is manual, but however in some companies like Amazon, they even automate and computer this process of shipment. It will be also based on computer. See in this figure we see the integrated system for cash receipt system. So here we can see that we still have some manual documents, and we have manual process. But then when we update the cash receipt system here, it's automated, and it is a computerized base, and we have real time in updating, and as well as in to the controller office. Okay, so that's the main difference that we need to bear in mind. When we have computer base, we have real time, we have also the computer based operation, and we have less manual process. Okay, let us discuss now the risk and control system, or internal control system. There are three main primary risks associated to revenue cycle. First is the undeducted data input errors in IT controls, including data check and check digital edit to help prevent errors, which we explained it in details in the last week topic. And then we have selling to uncreditworthy customers. We have physical controls and IT controls. We will explain it in short while in the next slide about each one of this. And then we have shipping incorrect items or quantities. Also we have physical controls and we have IT controls will be explained in a short while. So this figure or this table is explaining or summarizing the revenue cycle risk and controls. And I believe we will not go one by one, but let's take one of it, and we will explain the risk, and then the risk in this side, and then here is the physical control, which is based on manual processing, and we have the IT control related to that risk. So sales to an credit worthy customer is the first risk. When you sell on credit to customer that he has no good history of settling the payment, so that's the first risk. The physical control is the transaction should be authorized through the credit check, and also to ensure the segregation of duties, separating the credit check and the sales function. On the system, we have automated credit check. System will process that. No need to segregate, no need to do that, because the system will, when we have pre-list of credit amount and limit for each customer, the system will not allow more than what is pre-list in the customer name or customer number. Shaping wrong items and quantity. So the physical control is independent verification in the shipping department, reconciling the shipment with order or with the sales order. And for the IT control, we have scanner technology, we have barcode, automated inventory ordering. So we avoid having wrong items to be shipped to the customer. Inaccurate record keeping. So the physical control for that is transaction authorization, remittance list, and account record or the audit trail of documents, journal, and accounts and files. Also, we have independent verification by checking the and verifying the shipping, billing, and general ledger. Whereby for the IT controls, we have input data edit, we have automated posting to the accounts and file backup. For misappropriation of assets, we have here we have the transaction authorization, remittance list, supervision for the mail room when we receive the cash, access control for warehouse security and daily deposit of the cash, night deposit box, lock safes, segregation of duties, like cash receipt, general ledger, and also the account functions, warehouse inventory and inventory record. All of this is to ensure to avoid the misappropriation of assets, either the cash or the inventory. Okay, so that is the physical controls, whereby the IT control is multi-level security to achieve and segregation of duties. Lastly, is about the authorization or authorized access to data in physical access control. We mean access control of source of document, journal, ledger, and segregation of duties. The one who hold the sub ledger, and also the general ledger, the assets custody, about the segregation that we explained last week. And then for IT, we have password control, multi-level security, and prevent the unauthorized access to data. A multi-level security means we have different access security, different level of access. So if we have 3 layers management. So the desk of sales, they are authorized to sell on credit. To process the key in of sales, whereby the second layer of authorization is to approve this sales, where it will be in the, let's say, head of sales department, and then sales department also need to get the approval of credit check through the system, or through the what we call the other department. Okay. To have good understanding, I try to illustrate more in the threats or risk, and also the IT control in specific, in this way. So we have, in the threats and risk, we have incomplete or incorrect orders, we have involved orders, uncollectible accounts, stock out and access inventories, loss of customers. So this is the threats related to the sales order entry processing. And what controls we can have? We have data entry edit control, and restrict access to master data to maintain the accuracy, to control the invalid orders. We can have signature to authorize the sales, can be physical signature, or authorization signature, or can be digital signature. And for uncollectible accounts, we can have credit limit check, and if sales exceed the limit, specific authorization needed. For the stock and access inventory, then we can have perpetual inventory system, RFID or rapid or barcode technology, physical inventory counts, and so on. Okay. For shipping the goods activity, we have the trades. We have packing wrong items or quantities to the ship, thickness of items, fail to ship the goods, ship to wrong address. So how to control that? Barcode technology, reconciling packing list to sales order, to restricting physical access to inventory, document inventory transfer, physical count for inventory, and reconcile the to quantity recorded in the account of inventory. 3. Reconciling shipment documents to sales order, packing list, and packing slip. 4. Data entry editing control. So number 4 is mainly the IT control, as well as the barcode technology. For billing customer, what is the threats? Failure to bill the customers, billing errors, positive errors, posting errors in account receivable, and inaccurate or invalid credit memos. Okay, so what is the controls for that? Reconciling the invoice with the sales order and shipping documents. B is separate the shipping and billing functions. We have segregation of duties. 2. Data entry edit controls, configure systems for automatically enterprise data. Then 3. Reconcile the subsidiary account receivable balance to the amount of accounts receivable in general ledger. And lastly, segregation of the authorization and recording function for the credit memo. Last one is about cash receipt procedures. The trace is either theft of cash or cash flow problems. So to control it, we one is prepare the proper segregation of cash handling and posting to customer accounts, authorized credit memos, or reconciling bank account. B. Using lockbox for the cash on hand, as well as deposit all cash received in a daily base. And then lockbox as we say, discount for early payment to encourage the payment flow and cash flow, and then cash flow budgeting. Okay, so now let's talk about risk and controls, which is number one is inaccurately recorded. More illustration on the risk and internal control with regard the unauthorized access to accounting record and reports. So we have in the left side we have the physical controls. As it's repeating to what we said, either segregation of duties, proper documentations, and so on, and IT controls including password and multi-level security. We will explain multi-level security in a short while, but just to more classify them into either what is the risk, which is unauthorized access to account, record, and report, which we put them in different classification just for better understanding and good visualization of the idea. We did mention about multi-level security in several occasions when we discussed just now the the threats and or the risk and the internal control, either the physical, and then when we discuss the IT control, we discuss one of the techniques is multi-level security. So what is the multi-level security? Is using programmed techniques that permit simultaneous access to the central system by many users with different access privileges. Users are prevented from obtaining information for which they lack authorization. So they don't have authorization to access. The easy example for this is student and lecturer accessing the goal system, the goal system that we use as a platform for online teaching. So students are authorized to access the materials, access to do the online test and so on, but they are not authorized to check, to do changing, to delete that materials, the change materials, or they don't authorize to check the result of other student, only for their own student. Okay, so two common multi-level security methods. We have two. One is access control list. So we have a list of a list of controls, and we assign it to individuals. So methods assigns privileges directly to individuals, which is proud some in large organizations. So meaning that we have, let's say, 10%, 10 individual employee. So each one we will list down what they are authorized to access and what is the limitation for them. Whereby the second one, the second method for multi-level security is role-based access control, meaning that we create a standard task called role that are assigned specifically specific privileges. So instead of that, we say that this accessibility of task is we combine. We say that the person or the manager can access this and this and that. So instead, not based on the person, it's based on the role. Okay, so once a role is created, individuals are assigned to do it. So and then it's easy to add or delete roles as job responsibility changes. So it's preferred to have role-based access control instead of having access control list, because we can modify, add, and delete some roles to the person according to the need. Let's talk now about the point of sale system, or POS. The system of point of sales is, I believe, is familiar to every one of us. We maybe see it in the Carrefour, Tesco, or Giant, all of this supermarket and hypermarket restaurants, in the clothes shops and so on. It is and common system that used in the shops that we visit for buying, and it consists of screen to illustrate the items that for to sell and so on, and the transaction. It also have the screening machine for barcode of the product, as well as it carry the printing of the invoice or of the bill, and as well as the box under the here is to collect the cash. So this system is a very powerful system, and it helps a lot in especially in the sales point of sales system. POS is, as we said, this is a common used and it's extensively used with the retail business. And this system will start by when the customer bring the stuff from the shop, bring it to the cashier table, and then the cashier will scan the universal product code of that items selected by the customers, and then price and description retrieved from the inventory file, and the inventory levels are updated and reordered as needed if the items reach to the breaking point. And then after that, system automatically calculate the tax, discount, and total. And for those who come with the credit card or debit card, and they want to buy through that through these cards, so that the approval of the non-cash payment will be through the online connection. Then after that, at end of the shift, the money and receipt reconciled to the internal cashier register tip with cash over and short accounts, meaning that the internal cash registrar or the supervisor will come to collect the cash along with the receipt of cash to reconcile, check the cash is equivalent to what is in the receipt record, okay, and system. So this kind of record what we call internal control process. And then cash receipt clerk prepares the deposit slip for total daily cash receipt and batch program post entry to the general ledger. So in this figure, it illustrates the point of sales system flow chart, and it shows that the system the transaction processing of cash received start by either we have two options, by receiving cash or credit card. So the salesperson or the cashier will create a terminal to register this transaction, and in registering this transaction, we will check if it is credit card. We will check in real time the credit approval from the bank or from supplier of that card, issuer of that card. Then if that okay, then we will keep the cash and the credit card voucher. Sorry. If it is, then we keep it in tab file. Normally I believe it's generated by the Wave or the credit card machine, and then it is connected to the cashier. When they submit to the treasury, the transaction will continue there. Okay, then when we the system will process, the computer system automatically will process. What they will do, if you notice here, Um, First, they will deal with master file of master digital file or with inventory. So they will check availability, description, and price, and then also will update the inventory because we can see that the arrow is two head. They have two heads. It's two ways. So it means reading from the inventory and also updating the inventory file balance, and then also reordered if needed. And then also it will goes to sales journal to update the sales journal, and through the they will create also another processing automatic processing called batch processing. In batch processing, we will read from the sales journal file, which is the transaction file, will be the input as well as the cash received journal, and then they will update the general ledger and as well as the general journal vouchers of sales. And then in the end of the day or end of the shift, they will the registrar cashier, internal registrar cashier will come to collect and the cash and reconcile the cash with the credit card vouchers and tape and try to reconcile through manual. If you notice here, it's manual process, and reconcile, they will fill up the reconcile forms and keep it with the employee one to sign there, and then also it will send to the one copy of reconciliation form and deposit slip tape, as well as it will be sent to entry of cash receipt, and this will be updated to the will be filed, and then later on also will be sent the cash to the bank to deposit the slip and also deposit the cash. So what is the control in point of sales system? Main control is authorization. Authorization means we need to ensure that this transaction is by authorized person. So if we receive cash, then okay, we try to check that this cash is not fake or banknote. But if it is credit card, then we need to ensure that he's the owner of that card that they are holding or trying to use. So normally, previously, we try to ask them to sign on the credit credit card voucher. But I think now no more practicing this, because they may ask to ask the holder to key in the password. And another techniques is to send a verification message to the phone registered with the bank. Then normally, if it is not authorized transaction, then the owner of that card will call to freeze and terminate that transaction. Supervision, we have the observation cameras, and the floor security helps prevent shoplifting and employee theft. And normally we can recognize that if you can see in the roof and ceiling or above the cashiers, you will see camera above each cashier, just to ensure the supervision efficiency. Access control, separate cash drawers, locked showcase, and also magnetic tags attached to merchandise help controlling the thickness. Accounting records, only supervisors should access internal cash register tapes. And lastly, independent verification, the cash drawers should be reconciled to the internet register tapes. re-engineering the business is one of the techniques that the companies normally use, trying to reduce the cost and ensuring the effectiveness of the process in order to enhance the beta performance and profitability. And that will happen through deleting any non-adding value operations, reducing the documentation, adding the let's say computer-based system and so on. And one of these techniques in the relation with suppliers and customers is the system called electronical data interchange EDI. The idea of this system EDI is to have direct relation or direct interchange relation between the system and the system of the company with the customers. So the customers will place the order through the system, and the system will inform the customer about the price, about the quantity availability, and maybe also checking, giving them dispatch advice. Then the customer will send acceptance of that. Then we send the invoice through the system. All this will be through. For EDI, the customer's computer automatically orders inventory as needed. So if you are using, if the company use sales point system, sales of point, so it will be ordered automatically if it's connected to EDI with the suppliers, and sales processes order with little or no human involvement through the supplier system or the company system. And then the binding terms specified in trading partners agreement, or sometimes we have sort of catalogs, online catalogs that the customers can select the item that they want to buy. Control problems include ensuring only valid transactions are processed, and the accounting records not harm and are not compromised. Other techniques for re-engineering is what we call B2B or B2C, doing business on the internet business to the customers. What we can see Amazon, we have also Lazada, we have Shopee. All of this website is based on B2C, business to customer. So doing business on the internet business through the internet, just to reach direct to the customer without mediation of agent or others, as it is in this picture. So we cancel the shop, and we just direct from the factory to the customer. Doing business on internet, B2B, also another initiative to re-engineering through by buying from company to company without the intermediate, like what we say. Normally we will the previous practice will have another intermediate business to like agent and so on, but now no more. So this business platform, business to business or business to customer through the internet, is opening a new opportunity, 1,000 to 1,000 of business partners without formal trading agreement and so on. But it is also carrying a new risk, including the threats from computer hackers, virus, and transaction fraud. And we can also now new terminology is the cyber security risk and so on. Okay, so with that we finish. Thank you so much, and by now we finish the chapter 4, talking about the revenue cycle. In revenue cycle, we try to discuss in the beginning the the flow of activities, main activities in the sales in the sales process, sales and revenue cycle, and we discuss starting from customer order up to posting in and updating the general ledger for the sales revenue. We discuss also the cash collection. We discuss also return on the sales return in the manual base, and then after that we discuss the two environment, IT environment. We discussed in the first place the basic IT system, which still involve human activities on the process, or processing the recording of the cycle, sales cycle, and then we move to discuss the internal, the advanced system, where we have more automated computer-based process of transaction. We discuss also the risk and controls. What's the controls? And we in the controls we discuss in details the physical controls as well as the IT controls, and we match it to what we call the risk related to that the sales activities. After that, we also discuss the SOB, the sales of point of sales. Sorry, POS, the sales of point. Then we discuss the re-engineering process. We talk about the EDI, and we talk also about the P2P, P2C, business to business, business to customers. We discuss that is a few initiatives to ensure the business is running through the AIS system and through the internet. And we say that's opening these initiatives are opening new thousands opportunity for business to people, but also it carry more risk related to the using technology. With that, I end up the class. Thank you.